morning, everyone, and welcome to today's webinar for exporters to the EU and the rest of the world. The purpose of today's webinar is to help you to act now. New rules for exporting businesses, as you know, start on the 1st of January 2021. And there are preparations you will need to make to get your business ready for the changes ahead to ensure continued flow of people, data, goods and services between the UK, the EU and the rest of the world. The majority of these changes will take place regardless of the agreement we reach with the EU and our future relationship. So you can be confident the preparations for these changes will not be wasted. There's a range of guidance and support available to you online and through local trade officers to help you take action to get your business ready. So let me start now with introductions, our aims for today's webinar, and some suggestions for how you can best participate in and follow up on this event. So my name is Martin Cook, and I'm hosting this webinar today and will moderate the Q&A session at the end. I have with me Graham Zebedee, the Director for Continuity, Wider Europe and Development in our Trade Policy Group within the department. There are also some other staff from the department on the call to help support the webinar. The three aims for today's sessions are firstly to highlight some of the changes businesses will need to be aware of, whether you trade with the EU or with the rest of the world. Secondly, to signpost some sources of advice and support for business. This webinar will give you an overview of a range of issues and will also signpost you to some further webinars, such as ones on individual sectors from the Department for Business or from DEFRA. And also identify areas where you will want to take action before the end of transition. There are now fewer than 75 days left to the end of the transition period. In fact, if you are watching this live on Monday, the 19th of October, there are 74 days left, including today, and new trading rules apply from the 1st of January 2021. There are actions that your business needs to take now. Many of you will already have seen the public information campaign to help businesses and individuals prepare for the end of the transition period. I strongly encourage everyone to sign up for email alerts on the latest guidance from our website at gov.uk/transition. There are also a couple of helpful tools on gov.uk which provide step-by-step guides to the things you need to do if you're shipping goods to a country outside the EU. We will include the links to these guides in the post-webinar email that you will get. Now, there are 8 topics that we want to cover in today's webinar. The UK's global tariff for imports, trade agreements, generalised scheme of preferences, government procurement agreement, exports of controlled goods, including dual-use items, trade remedies, market access barriers, and we'll also talk about sources of transition guidance and support. Before I hand over to Graham to introduce the global tariff, let me just say a quick word about questions at the end. As Matt said, you can ask a question via the Q&A function on the bottom right of your screen. And please do send your questions in throughout the webinar rather than waiting for the end. Now, firstly, you'll appreciate that as civil servants, we are not able to comment on the politics relating to transition or EU trade deals. Secondly, there are around 1,000 people on the webinar today. So although we put some time in at the end for Q&A, it's unlikely we'll be able to answer more than a handful of the questions that come in today in any detail. But notwithstanding that, please do send in your questions. Even if we cannot answer them specifically on this call, we will use the questions that we get today to inform future sessions that we plan to run. So for example, if we get lots of questions on exporting dual-use goods, we'll put on a more detailed webinar on just that topic. We also have a specific email address to which you can send questions. The team on the end of that email will answer questions that relate to DIT policy areas and will signpost you to the right place in other government departments if the question is not for us. I'll give you some details of that later on in the presentation. And finally, just to add that the webinar today, as Matt said, is being recorded. We will send a link of the recording along with some other important links to everyone who signed up for the webinar. Thank you, and now over to Graham.
Right. Martin, thanks very much. Good morning, everyone. My name is Graham Zebedee. I negotiate trade agreements. I'm going to talk you through these topics. The first two topics, the UK global tariff and trade agreements, are broadly of broad interest. I think they should be of interest to all companies who trade with countries outside the EU and who trade with a broad number of countries. The following four are much more limited in scope, but we have included them anyway because there will be companies to whom that they apply. Right, start off with the UK global tariff. So tariffs are the taxes you pay on imports. At the moment, and in the case of the last 50 years, we have the same tariffs as the EU. However, and that's the case as of right now today, however, from 1st of January, that will change. The good news is that tariffs are very largely not going up, and therefore it won't be extra tariffs that people have to pay. There's a reminder there that we do not know whether or not there will be a trade agreement with the EU in place. This is very much commented on in the media, and we all hope and expect that there will be such a deal with the EU, but no one can know for sure on this occasion. So what is our UK global tariff? We decided to make a tariff that was easier to use, simpler, with lower tariffs than was the case when we were in the EU for various goods. There are many thousands of different tariffs on different goods. I can't therefore go through them all today, but I can describe generally what we've done in the creation of this new tariff. It goes live from 1st of January next year. So, for example, we cut out entirely tariffs that were less than 2%. We've done standard, we put tariffs in bands, so instead of tariffs being 3.8% and 4.2%, they're all 4%, for example. We've reduced a lot of tariffs, including on things that we don't make in the UK for the benefit of consumers, but we've retained tariffs where that is necessary to protect domestic producers and also to ensure that developing countries still have a preference, i.e. get lower tariffs than the rest of the world when they're exporting to us. So these tariffs apply to all imports that are not coming from countries with whom we have a trade agreement. So we don't have a trade agreement currently, let's say, through the EU with the United States, with China, with Brazil, with India, with the countries of the Persian Gulf, for example. So imports from all of those countries and many more come under, will be subject to the global tariff. As you can see there, it's countries with whom we don't have a trade agreement and also not part of this generalized scheme of preferences that I'll talk about later, or are not subject to a relief or tariff suspension. These are the tariffs that will apply for imports from those places. So if you want to know what the tariffs will be on things that you import, go to this the website that's given there. You will be able to find out what those tariffs are going to be as of 1st of January. You don't need to know the code. All tariffs have a number they have a coding system. You don't need to know that. You'll be able to work it out with the tools that have been provided there. Okay, moving on. Bilateral trade agreements. So, as people might know, as a member of the EU, we were covered by all the trade agreements that the EU had. As of 1st of January, we will not be covered by them. We will no longer be covered by EU law, and that includes trade agreements. So, therefore, over the last several years, and this has been one of the things I've been doing, we have been negotiating trade agreements to replace the trade agreements that we've had as a member of the EU, and in most cases to get very, very similar ones, such that on 1st of January this year, things will be very similar for countries with whom we've replaced that trade agreement with a new one. And you can see some figures there about the number of trade agreements that we've already done and the value of trade that covers, so quite a lot. So at the end of the transition period, as I say, these new UK bilateral trade agreements will kick in. So let's talk about, let's say South Korea, for example. It's quite a big one. The EU has a trade agreement with South Korea. That will, the UK is still covered by that, even though we've left the EU, but that will end on 31st of December this year. And at that exact moment, the UK-South Korea trade agreement will kick in and replace that. So with whom have we signed trade agreements? Well, with countries on that list there. And you can see quite big ones at the top. Switzerland, Iceland, Norway, the EEA, EFTA countries, South Africa and neighbouring countries, South Korea that I mentioned, Israel, the Caribbean, some countries and various others. I won't go through the whole list, down from the really big to the pretty small. And as I say, those trade agreements that we have signed will enter into force and apply to your trade with those countries as of 1st January. There are some EU trade agreements with whom we have not yet concluded, countries with whom we have not yet concluded an agreement. We keep working on those, sort of even as of today. The big ones there, as you can see from the trade figures, are Canada, are Singapore, Turkey, and Vietnam are the biggest. Very much, very much working hard on those agreements to get a bilateral agreement in place, such that it will seamlessly replace the agreements that the EU has with those countries as of right now. This, I have to say, is a different bit of work to the new trade agreements that we are negotiating. So we are also, and this is very well covered in the media, negotiating a trade agreement with the US, and we're also doing so with Australia and New Zealand. The EU doesn't currently have trade agreements with those countries, so they are new. So we're already not covered by a trade agreement there. That won't change on 1st of January. We will be negotiating these agreements. We're doing it very quickly, as reasonably can, while still wanting to get a very good deal, of course. And we hope that those will be concluded soon. But those agreements with the US, Australia, and New Zealand don't replace existing EU trade agreements. So if you trade with those countries that I've put up there, here's the list of signed ones. These are all on gov.uk. You search on gov.uk and then on trade continuity agreements, you will find them very easily. If you trade with those with whom we signed an agreement, or the ones where it's still under discussion, then do please go to that website, the web address, have a look to see which trade agreements there are of interest to your business. As I say, the trade agreements that we have signed are very similar to the EU ones that they replace. Where there are differences, then we put that information on our website. But I don't want to play that up. Those differences are pretty small. They will not affect a very broad range of companies, and therefore, for the most part, you can have confidence that your trade with those countries will not be significantly affected where we have a trade agreement in place. You can also sign up to get an alert which will tell you when we signed a new trade agreement. We're doing that all the time. We signed an agreement with the Ivory Coast, for example, last week and the week before, we signed an agreement with Ukraine. So things are happening quite quickly, and I expect them to continue to happen at a decent rate between now and the end of the year. We're really going for it in terms of negotiating those remaining agreements. The one thing about using trade agreements, as people, as companies may well know, is that if you want to claim a preferential tariff, then you need to have an origin certificate. Go to your current origin certificate provider. In many cases, that will be the British Chambers of Commerce, and also in terms of meeting the origin threshold in trade agreements at the moment, that you count all EU content towards that threshold. That will be the case. That will still be the case. We've negotiated these replacement trade agreements such that EU content and processing will still count towards meeting the origin threshold. So same thresholds, same content that counts towards the threshold, and same origin certificate provider. I mentioned that most EU agreements, EU trade agreements that already exist, we've replaced with ones that are very similar. The one exception to that thus far is Japan. We just finished negotiating this agreement myself. This trade agreement is designed to be better and more liberalising than the trade agreement the EU has. I won't go through these improvements in detail, but in a number of areas it goes further. It doesn't go less far in any significant area. It's got some better provisions on digital and data. We've agreed more rules on and more prospective future liberalisation on financial services, and the number of other agreements, a number of other benefits that are listed there on that page. We hope to sign this agreement before the end of October, at which point we will be putting more information about that on our website. So if you trade with Japan currently, the things that you liked about the EU agreement will continue. And if you work in some of the areas that are on the screen now, then there might be things in it which are even better than there were before, that it will be worth your while just having a look at. So I mentioned at the start that there were two areas which I think would be of broad interest to companies, and there are a few areas which were a bit more niche. So we're now onto those more niche areas. So generalized scheme preferences is a system whereby UK importers will pay lower and often zero, not always, tariffs than you would under the normal tariff. So it's not a trade agreement. It's something we do unilaterally in the UK, basically to help developing countries. The top story here is that nothing's changing at all as of in terms of the tariffs that you pay as of 1st of January. So if you import textiles from Bangladesh, for example, or any number of things that you can import from the countries that are covered here, all of those tariffs will be the same. So nothing in particular for you to do or to worry about in terms of different tariffs. The exception to that is where there's a proportion where the tariff that is paid is a proportion of the UK global tariff, and the UK global tariff is changing. So and again, it's nothing to be unduly concerned about, because it will just mean that the tariff that you pay is going to be a bit lower than it was before, because it's a portion of the UK global tariff, and the UK global tariff has itself reduced. we want in the future to reform GSP to make it better for UK importers and for developing country exporters. However, now didn't seem like the right time to be doing big changes in that area with everything else that's going on, but we have that very much in our mind. We will provide guidance there about the exact forms that we have that you use. That is a little bit linked with the EU-UK negotiation that's going on at the moment. Therefore, we can't be definitive about that at the moment, but please do look at our website and or HMRC's to ensure that you know the latest in terms of the form that you use in order to get a claim the preferential tariff rate on those exports. Okay. Government procurement agreement. It is an agreement between a lot of countries, under which those countries open their markets for basically for government tenders, public contracts. And the top story here is that nothing's changing as of 1st of January. So if you currently compete for public contracts in other countries, this is not like having a trade agreement. This is a sort of broader thing than that, covers lots of different countries. Then you will still be able to do exactly as you have been doing, as you do right now. So again, if you weren't aware of this right, then it is worth you knowing about it, and that it gives access to an enormous amount. Somebody's come up with a figure of 1.3 trillion pounds worth of public contracts, which are going to be available to a lot, but nothing is changing as of 1st of January in this area. So as it is mentioned there, that 1.3 trillion figure I mentioned just now. And there is some more information about the countries and the markets which are covered by the government procurement agreement. Okay, now some of you, many of you, this won't apply to, but some of you, I expect on this call, will be used to applying for export licenses for some of your goods. These are goods which are either of military use or what we call dual use goods, which can be used in both military and civilian, have both military and civilian uses. If you export military goods, there's no change at all in the system, in what applies, because you already need at the moment a license to export military goods from the UK to the EU, European Union. However, as of 1st of January, you will need to have a license for dual use goods. You don't need that as of now today, but you will need that as of 1st of January. So if you think you export something which might be of both civilian and military use, and there's a means of checking whether or not that your goods there are on the list, then you do not need to, whereas you don't need anything now for getting those products to the EU, in future you will. And it's, as it says there, the licenses that have been issued will remain valid in terms of individual export licenses and registrations for the broader licenses that are listed there. However, the following licenses will no longer be valid, and so where goods to be shipped from an EU member state, you will need a license issued by that member state. An export license issued by one of the EU 27 countries will no longer be valid for export from Great Britain. So we will be circulating something with all these links, and that will allow you to both check whether or not the goods that you currently export or goods that you currently export do require a license. Okay. Let's move on. Again, a smaller thing which won't apply to many companies. trade remedies. So this applies a lot in sectors like, let's say, steel or ceramics, or often have that. We apply a trade remedy, which is often in the form of higher tariffs when it looks like somebody is pricing below cost, dumping goods on our market, or unfairly subsidized, or sometimes there's just an enormous surge in imports which causes a problem. So because we've been in the EU, we've been doing trade remedies as an EU country, and we will assess whether or not all of these EU remedies whether they're suitable for the UK. So if they apply to something that the UK doesn't make at all, I don't know, let's say sweet oranges or something, then the UK would probably not want to keep a remedy on something that we don't produce, so there would be no point. However, if they're something that we do make and we think that actually the EU had it right, that it was a harmful exporting practice that needs to have extra tariffs slapped on it to protect our domestic industry from unfair foreign competition, then that's what we'll do. And so we're reviewing all those measures, and we're already well into the reviews of some things, including the ones that I mentioned there, rainbow trout from Turkey, for example. I think there's a trade remedy on ironing boards, I think, as well, which might be being pursued. So if you're currently sort of in a business where there's a trade remedy and you'll probably be aware of it if you are, because indeed you might have been one of the businesses complaining about it to the EU to get the trade remedy on in the first place, then we have a look out to see whether or not we are going to be maintaining that remedy. So if your business isn't affected by that, you can find out about that. And of course, when we are sort of fully independent of the EU as of 1st of January, then we will be running our own trade remedy system. So it will be the newly formed body called the Trade Remedies Authority, which is in Reading, who you will go to say, actually, there's some unfair dumping of water pipes from Ruritania or whatever it might be, and this is harming my business. It's unfair competition. Therefore, please investigate and see whether or not it is unfair competition, and if so, please do something about it. So it will be the UK authorities you go to, not the EU's, as of quite soon. Okay. Now, market access barriers is the final thing I wanted to cover. This is not something that changes as of 1st of January, but I wanted to mention it because we in the Department for International Trade are always looking for barriers to the access to a foreign market. So we're talking about regulated rules, laws, excessive paperwork requirements, anything that we can, through our lobbying and influencing through both from the UK and through the UK's embassies all around the world. This is one big thing that we do. You can see some of the things that we have been successful in addressing. And this is really a kind of a big part of what we do in DIT, is do whatever we can to reduce those legal and regulatory barriers. So we've got a new online tool which we'd really love to hear from you if you are facing a barrier in any market, and you think that we may be able to help. Even if you're not sure whether you think we can help, please just give us a try. It's fantastically useful and important to us to know what companies think are the barriers, and it's quite a simple online process. Doesn't take very long, it may well be something that we will be able to do something about, and we will always get back to you, irrespective of whether or not we can action it or not. Let me just go forward to the next page, and with that, hand back to Martin. But I'm going to be back a little bit later to answer as many questions as I can. Thanks very much.
Thanks, Graham, for covering so many topics so quickly. And thanks also to all of you for your questions. I've been trying to scan through these as they've come in over the last half an hour or so. I just want to highlight some other sources of information which you might find useful. So our colleagues at the Department for Business are running a range of sector-specific webinars. And there are also some webinars being run by DEFRA for exporters of animal and products of animal origin. So I'd encourage you to take a look at those. You can sign up to relevant webinars by following the links on your screen now. And as Graham said, when we send around the recording of the webinar, we will put these links into the covering email so that they're easy for you to find. Also to say, as I've been kind of scanning questions that have come through, I've seen a few people say that they're not sure how to receive the slides or the webinar afterwards. So just to say that when you signed up, there was a little box to tick to say, did you want slides or the webinar afterwards? If you didn't tick that, if you're not sure if you ticked it, give it a day or two. And then if you haven't had anything from us, that probably means you didn't tick the box, in which case, please email ukmarketing@trade.gov.uk. That's ukmarketing@trade.gov.uk. But give it a day or two, please, for us to get these slides or the content out to you. A quick word about, for those who are exporting to Europe, to say we've introduced a thing called the Online Europe Trade Hub. This is a portal which asks you a few simple questions about your business, the current markets that you operate in, and your growth plans. And our team can then make contact with you to discuss possible market choices and opportunities across Europe, to tap into expert knowledge of our teams from 34 countries, to connect with our market access specialists in Europe, and to offer support in general from the Europe Export Growth Team. So if you are selling into Europe and interested in doing more in Europe, please do think about contacting that Trade Hub. This is the last slide before we take some questions. So after this session, I would encourage you to visit and bookmark gov.uk/transition, where you'll find the latest updates to guidance and an email alert subscription link. Now, if you can't find answers on that site, there's an inquiry form on great.gov.uk, which is a DIT site. We will send out the link to that form when we send out the details of the webinar. But one way to find it is to go to great.gov.uk, scroll all the way down to the bottom, and hit Contact Us. One of our experts will then either answer the question or point you in the right direction if it's another government department that covers that policy area. There's other support on DIT's website, great.gov.uk, including the latest export opportunities, and there's advice and support available from your DIT local trade office in England, or from Scottish Enterprise, Business Wales, or Invest Northern Ireland if you're in one of those countries. So now we'll turn to questions in the chat. Before we do, just to say, as I've gone through this, I've seen a number of questions on issues around VAT and importation of goods at the border, and issues around stuff that really falls to HMRC. We'll look at these questions afterwards, and we'll do our best to email out to you and give you suggestions to where you can get the answer. But DIT doesn't itself cover what can be slightly complex rules about VAT. I don't want to give you or steer you in the wrong direction, so we'll follow on those ones afterwards. So Graham, if I can turn to you for the first question. It's about EORI numbers. So this is one you feel a lot of knowledge on. But the question is, do we need an EORI number for both the UK and for the EU?
I'm sorry, I think that falls into the category HMRC. I think that's to ask HMRC about.
Okay, so I think the answer, by the way, is that you may need both, because this is an issue about moving goods across the border, and the EORI number is the code that allows your goods to cross a border. So I think, but again, as Graham says, please do check with HMRC that you'll need one to move your goods across the UK border, and a separate one for the EU to cross the EU border. But please do look at the HMRC side or the details on gov.uk. There's also on gov.uk, as I said, there's a helpful step-by-step checker. Again, we'll send the details out on that one to you, which takes you through the various things you need to do, and that covers EOE numbers as well. So our next question, Graham, is on dual-use goods. What would happen with a dual-use item which is currently in the EU, but is still our UK property and needs to come back to the UK after the 1st of January?
So the EU company would have to get an export license at that point to export it from the EU to Great Britain, and then you would need a license then if you wanted to export it further to anywhere.
Next one, Graham. When will we know the trade agreements for Canada and the USA as we export there? Thank you.
So Canada, soon. Our discussions with them are at a very advanced stage. It's hard to know exactly when we'll conclude, but I hope it will be soon. I hope that we will get an agreement in place to replace the EU-Canada agreement, and that will apply on 1st of January 2021. With the US, I don't know. It partly depends who wins the election in a few weeks over there. We're working that quickly. The EU doesn't have a trade agreement with the United States, and therefore there's nothing for it to replace. So it's a different kind of thing to the Canada agreement.
Thanks, Graham. What do you mean by iconic goods and services and creative industries in the Japan-UK trade agreement?
So by iconic goods, we mean ones that are protected by intellectual property. So we're talking about things like Melton Mowbray pork pies or Scotch whisky or West Country farmhouse cheddar. So those items, some of those items are already protected in the EU-Japan agreement. In future, in the UK-Japan agreement, a lot more of those items will be protected in an intellectual property sense in Japan when we're implementing that agreement with Japan.
You mentioned about tariffs on rest of the world countries, but how do we know what tariffs will be applied to EU countries? Is this still ongoing while an agreement is trying to be reached? That's
right. The UK really wants an agreement with the EU where we pay no tariffs for exporting to them, and they pay no tariffs for exporting to us. However, that the discussions for that to have such an agreement with the EU continue as of today. So it's not possible to say what will happen. If the UK and the EU don't have a trade agreement, then the tariffs that the UK exporters will have to pay to get their product to the EU will be the ones that the EU applies to the whole of the rest of the world with whom it doesn't have a trade agreement, like China and America, for example. And the tariffs that the UK importers will pay for exports from the EU will be the ones in the UK global tariff that I mentioned earlier.
Graham, are there any talks with the Maltese government to have a trade agreement?
No. Malta is a member of the European Union and therefore will be covered by whatever deal we do with the EU.
So it's a question on, can you say a bit more about cheese and whiskey being protected and kind of what that means?
Yeah, so what it means, let's say if it's Scotch whisky, well-known one, that if anyone else tried to market their market their product as Scotch whisky, then the country we have a trade agreement with would be obliged, well, let's say Japan in this case, would be obliged to take a domestic legal case against that company to say, stop trying to market your product as Scotch whisky. The only thing that can be marketed as Scotch whisky is whisky that comes from Scotland. And you might know that, if a British company tried to market its product as champagne, that would be illegal as well, because champagne can only come from the Champagne region of France. It's that kind of thing.
A related, slightly different question, Graham. Thinking about the USA, there are currently additional duties payable on UK whisky going into America. Will those still be in force after the end of December?
So the end of December won't change anything in terms of trade with the US. Those additional duties relate to a trade dispute that's going on. We're trying very actively to resolve that with the US direct. We're pretty unhappy about it, but that's a separate thing to the end of this transition period.
A question about the Middle East, Graham. Is there any progress made with trade agreements for the Middle Eastern countries as they weren't on the list?
Yeah, so we have trade agreements with some. One or two were on the list. We have trade agreement with Israel. We have one with Jordan. We will, fingers crossed, be signing one soon with Egypt. And depending on how far you define the Middle East, we have one with Morocco, Tunisia as well. We also, in future, we might well have trade talks with the countries of the Gulf, so Saudi Arabia, UAE, Kuwait, etc. That could be, it's a longer term thing, but it's not impossible in time to come.
Okay, a slightly technical question now. Can you confirm the word bilateral trade agreements have been signed? These are like accumulation of EU source product. And perhaps you might explain what accumulation means for the audience.
Yeah, sure. So yes, I can confirm that. The slight section to that is Japan, where we've got accumulation of EU. Accumulation basically means, you've got to have something's got to be sufficiently British to be an export from the UK, which qualifies for a lower tariff in the country that we're exporting to under a trade agreement. So otherwise, if you didn't have that rule, you could just import things from China, stick a label on it, stick a UK badge on it, and then re-export it and claim the tariff. It would sort of make a bit of a mockery of trade agreements. So that's why you have rules that specify a certain percentage of the value of a good that is British. In our trade agreements, we're allowed. We've negotiated to allow that content and processing from the EU of 27 countries can count towards meeting that threshold. So that's what that means. And you have to get an origin certificate. This is the case now to show that your good meets that threshold.
Thanks, Graham. Thinking about the various new trade agreements, the bilateral trade agreements, when will the rules of origin or customs notices with all information be released for these UK-only FTAs?
The rules about what you need to do are going to be the same in almost all cases, and the origin certificate that you use will be the same in almost all cases as well. So go to your current origin certificate provider. They will know all about this. I think the only change you do is when you put origin of good on the form, you write UK rather than EU. So it is not a big change.
A question on GSP, Graham. Will trade agreements with countries, for example, Vietnam, that currently have GSP status mean that the 0% duty is removed once agreed? Which applies, the GSP status or the trade agreement?
Good question. The trade agreement it applies. Where there is a trade agreement and a country is eligible to get GSP, the trade agreement supersedes GSP terms. So the Vietnam is a country with whom I very much hope we'll have a trade agreement in force on 1st of January. So we'll be trading from that point with Vietnam under trade agreement terms, not GSP terms.
I've got this tongue-in-cheek question here. If there's no deal with the EU, will UK winemakers be able to market champagne in France? Can we market champagne, and will France be able to market Cornish pasties?
A good question. I don't know. I mean, I guess, to be honest, I'm not sure of the answer to that. It's a good question. I'm sorry, I'm not sure.
Okay, so we'll try and come back to you on that one. That's a really tricky one. Thank you. A question, where do you get certificates of origin from, Graham?
So most people get their certificate of origin from the British Chambers of Commerce. So, do be in contact with them. They provide almost 95% or something of the origin certificate. So this is the case now. The requirement for having an origin certificate doesn't change, won't get greater as a result of this process. It's just that it would just be a new trade agreement that the UK will have with the country rather than the EU will have with them.
A question on trade remedies. Will sheet steel purchased from the Netherlands currently be included as part of the trade remedies discussions? Well,
trade. At the moment, if there's, at the moment we're in the same block in trade terms as the EU. So it was never been possible to apply a trade remedy on steel or any other products coming from the EU. There was no tariffs, there's no forms to fill in relation to that export. If in future, after 1st of January, anyone's got a concern about any product, coming from the EU, including that steel from the Netherlands, thinks that it's been unfairly dumped on our market, or there's a sort of import surge or unfairly subsidized, then that is something that our Trade Remedies Authority could look at. So if you think that's the case, then do make your complaint to the Trade Remedies Authority.
There've been a couple of questions about Norway. In terms of our kind of trading with Norway, is that part of the EU or is it somehow different?
Yeah, it's different to the EU. So they have their own tariffs, for example, and we're negotiating right now with Norway. Norway, Iceland, and the mighty Liechtenstein are negotiate as a bloc, and we're negotiating with them. And again, I very much hope we'll have an agreement with them to kick in on 1st of January. Exactly the form of that agreement is hard to know at this stage, because Norway, although they're not in the customs union with the EU, they are in the single market in effect. And so exactly the agreement that we have with them does depend on what kind of agreement we have with the EU. That is also the case for our agreement with Turkey, in that Turkey's a bit different. It is in the customs union with the EU for many purposes. It's not in the single market. It's sort of opposite to Norway, if you like. But it also the agreement, that the UK-Turkey agreement, will also have to depend a little bit on where we get to with the EU.
Thanks, Graham. A question from someone who's clearly been following some of these discussions quite closely. So if we were to join CPTPP and the US were to join it at a point in the future, would we still try and negotiate a bilateral FTA with the US?
Very good question. Probably yes, I would say. Because bilateral agreements go deeper than what's been covered by this Trans-Pacific Partnership Agreement that you mentioned. which is 11 countries around the Pacific Rim that the UK wants to join. I appreciate we're not really in the Pacific region, but nevertheless, those countries have said that they would very much welcome us trying to join. So, yes, hard to know. Certainly, if Donald Trump remains president, then I'm sure the US won't seek to join CPTPP. But if Joe Biden wins, who knows?
A question about Poland. How are talks going with Poland?
So Poland's a member of the European Union, and therefore what I said earlier about the UK discussion with the EU applies.
Okay, I'm scanning through the questions, and there's a fair few questions here around things like CE marks and packaging and labeling. So for those people who sent those in, can I suggest that you take a look at some of those sector-specific webinars that the Department for Business is going to be running, because those are areas that they are really best placed to comment on. I'm sorry that we're not able to answer those questions for you. I'm just scanning through questions, and we appear to have kind of covered, I think, the last bulk of the ones that I think that we can. Questions just come in. Where can we find details of the tariffs that are already agreed? I'm not sure if that's the European tariffs or our tariffs. Perhaps you could cover both, Graham.
Yeah, sure. So in terms of the UK's future tariffs, then that will be the UK global tariff that I mentioned earlier. That will apply to all goods, apart from ones that are imported from countries with whom we have a trade agreement or who are covered by GSP that I mentioned earlier. In terms of tariffs that you face when exporting abroad, then if the EU doesn't have a trade agreement with them, with that country you're dealing with, like the US or China or India, then the tariffs won't change on 1st of January. If it's a country with whom the EU does have a trade agreement right now, then look on our website to see whether the UK will have a replacement trade agreement. If we do, then in almost all cases, it will be the same tariff that you'll face when exporting to that country as of 1st of January next year.
So there's a question going around countries like the US and China, where neither we nor the EU has a trade agreement currently. So do we just carry on trading with them exactly as we do right now?
Right, exactly. I mean, in almost all cases, it's just the same. I say almost all because sometimes, even if we didn't have a trade agreement, there might be a kind of sector agreement, like there's a sort of mutual recognition of what it means for a product to be organic, for example, that we have with some countries, organic agreement. And that was done at EU level. So in a very few cases, it might be slightly different. But in almost all cases, if there's not a trade agreement with the EU right now, nothing changes as of 1st of Jan.
A question, you're talking to a number of countries about future free trade agreements. Can you indicate when you think those discussions will be resolved?
It's really hard to know, because we're really going at it full tilt. But sometimes you get very close to a deal. That's one of my experiences. And then going the last mile is a really, really hard thing. And that's the thing that takes ages. So I wouldn't like to say, to be honest, but with goodwill on both sides, we might be doing some more deals next year.
Thanks, Greg. There's a couple of questions in here around services, and in this webinar we have mostly focused on goods and the movement of goods, because there are a number of quite substantive changes there about moving goods across the border. Just to say, we will pick up those thoughts on services. We'll talk to our colleagues in the Department for Business, and they'll put a separate webinar on to provide more information on what's changing there. But we're not going to cover that specifically in this particular webinar right now. But we will organise another one. So those of you who are particularly focused on services, keep an eye on us, and we will give you some more information shortly. A question about dual-use items. Does the EU have a similar solution to the UK-EU dual-use OGEL, which is an open general license? in place that our customers can register for?
That is a very good question. I don't know, to be honest with you. Let us take that question away and get back to you.
In the continuity trade agreements that have been agreed so far, are there any that are not exactly the same as the ones that the EU previously had?
Not hardly any are significantly different. I'd say that there's slight difference on the one we've agreed with Switzerland. There's a mutual recognition element to that, which the agreement we've done with them has very slightly less coverage. There are one or two places where the quotas are different. So, for example, if the UK had the EU had a quota for the amount of stuff that it could export, let's say to South Korea, for example, where the UK doesn't export a particular product, we haven't got a quota for the export of that for export to South Korea. So we're talking pretty minor things. However, have a look out when we, if you're interested in the specifics of something, have a look on our website. We have all the details in a report which compares precisely how a UK trade agreement is different to the EU one that it replaces. So you can get chapter and verse on that through our website.
Thanks, Graham. I think we've got time for one more question before we close down at 11:30. And this is a question, so for countries that are under the everything but arms agreements, such as Cambodia and Myanmar, how will these agreements be maintained?
So we'll have exactly the same terms for everything but arms countries. Everything there is duty-free, quota-free, apart from weapons and ammunition. That will apply. The tariffs that are there now will be the tariffs that are there after 1st of January. Since you mentioned Cambodia, let me just say that the EU is doing a review to see, decided to suspend some of the tariff preferences on some exports from Cambodia. Therefore, tariffs will go up. The UK isn't necessarily going to do the same as that. We are doing our own review of the situation in Cambodia, and we will come to our own judgment that will apply from 1st of January about what tariffs should apply to exports from Cambodia. Since this will be the last time I talk before we close down, I just want to say thanks so much for the questions. I'm sorry we couldn't get to all of them, but I really want to help everyone to understand these new arrangements as much as possible. So if you send them in, me and my team will do our absolute best to get back to you with all the clarity that you need. And I know it's a tough time for a lot of business right now, so I just say I really appreciate you dialing in. Thank you.
Thanks, Graham, and thanks to everyone on the call. We appreciate all the questions. As I say, following this, we'll send around the recording and a summary of all the key links that were in the slides around to you. So if you don't get those, I say again, please drop a line in a couple of days to ukmarketing@trade.gov.uk. Just say thanks again for all the questions. I'm sorry we couldn't answer them all, but we'll look at the ones that we weren't able to answer, follow up with those ones where we can, or we might have some discussions with our colleagues in HMRC or the Department of Business about how we best respond to those by doing other webinars that you might find useful based on the questions that you've asked. So a huge thank you. Thanks for your time. Thanks for your thoughts. Thanks for your questions. And the best of luck going forward. Thank you very much indeed.